Good morning, everyone. This is Marshall Giller bringing you the morning comment for April 13th. Well, traders who want to play the non-farm payroll should make a note of last week. The non-farm payrolls had the biggest miss in a little over a year, and yet the Fed funds futures rate expectations rose every day the following week. Now the dollar is opening higher than it was a week ago against all the G10 currencies and most of the emerging market currencies that we track. The lesson is that non-farm payrolls are important, but not decisive. The FOMC has considerable discretion, so the way officials interpret the data is what matters. For example, on Friday, Richmond Fed President Lacker echoed comments from other FOMC members that the recent weak U.S. data was due to the unusually cold winter, and he still wants to raise rates in June. This monetary policy divergence remains the basis of support for the dollar. The Canadian dollar had a few good moments on Friday after it was reported that jobs unexpectedly rose in March, in part because of hiring in the natural resource industry, which makes it even more surprising. Also, housing starts were up sharply. The news adds to other recent good data to ease fears that weakness in the economy might be front-loaded in the first quarter. It therefore makes it even less likely that the Bank of Canada will cut rates this week. Friday's Commitment of Traders report showed that investors closed out a bit of their short euro positions, but nothing special. They remain overwhelmingly short euro and overwhelmingly long the DXY index. China's exports unexpectedly collapsed in March. This suggests a weak external environment is likely to add to sluggish domestic demand and slowing investment to put pressure on the Chinese economy. But the stock market rose anyway because people expect the government to come to the rescue with some stimulus program. Personally, I doubt the government would launch the kind of debt-fueled stimulus program that the market's hoping for. I expect investors to be disappointed eventually and for the market to fall back. That would have serious implications for the Australian dollar. Aussie dollar fell sharply this morning after the trade figures came out. I remain bearish on the Aussie. The calendar today is very light. The only noteworthy indicator during the European day is the Swiss National Bank weekly sight deposit data, and that hasn't been very noteworthy recently. There are no major events or indicators released during the U.S. session, and no speakers on the agenda either. For the rest of the week, the big day is Wednesday, when we have two central bank meetings, the ECB and the Bank of Canada. At their last meeting, the ECB announced the details of their quantitative easing program, and the first month of its implementation has already been successful. Therefore, we don't expect any new measures. The Bank of Canada is expected to keep rates unchanged, so the market impact will depend on the tone of the statement. Given the recent data, as I mentioned, I expect a more optimistic statement that could boost the Canadian dollar. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.